You know, okay, so we are. Hey, chat with this. That's a recording. That's not being able to get back in. Hold on. For the people that are still on, just bear with me for 1 second. I just want to make sure that everything is back up and running. Okay, it's playing a recording. Okay, just want to make sure that everybody can be able to hear me and actually be able to move forward. Once again, thanks for bearing with me while we actually go through some of the mechanics on being able to get this right. Let's see. Unlove. Someone please type me a message, see if you can be able to hear me. And while we actually do that, then I'll go ahead and keep on going from there. Just type in a message if you can be able to hear me, so I can be able to know where we're at on this one. It makes it a little bit easier for me to be able to understand where I'm at. If somebody can be able to say that if they can hear me live. Okay. All right. So here we go. Good. Okay. Thank you. Appreciate that, Zap. Okay. Now, what we're looking at is this. We have a couple pairs that I'm very interested in being able to get into. One of the pairs in particular is the switch in for being able to get into another buy trade as we are in it. So if you were not in the trade, if you did not get in the trade when we ended up talking about it earlier, where it was at 109.61, quite frankly, you would have been out almost 100 pips for this actual movement. We can see that the market is actually starting to retrace this a little bit, but the best thing about it is currently right now, we can see it actually in the buy zone. With it being in the buy zone, and we know that it's basically working within this overall sequence of Fibonacci's, we know that the D extension on this one is at 112.64 for its overall movement. Now, a couple things that we can be able to do. One, we can be able to hop into it right now and not wait for a counter trend line break and see what happens from there. Secondly, what you could do is you could wait for the market to be able to break this overall movement right here towards the upside. Once we get that break for the market going up there towards the upside, then after that, you can look to be able to buy. I would say right now, I would probably wait for that. Just because we might end up getting a lower price to be able to get in. But I think that there's great value on being able to get into this price right now to see that the market will end up breaking in, probably a retest, and then after that, I'll move back up toward the upside. Currently, right now, I'm up on this one a few different pips on being able to get in. I do like the position for being able to buy right now. So I'm not saying that it's not necessarily a bad position to be able to get in right now. I believe that is a good one. But if it goes down a little bit lower, then I would just wait for it to be able to break the trend line towards the upside, and then after that, look to buy from that actual position. Now, from a stop perspective, if we're going to end up doing that, I would say place your stop below the swing low. If you do feel a little bit more comfortable in being able to do it, you want to place it about 50% of the overall daily trader range, which is 80 pips of this overall move. So we can see it right here. There goes our swing low right there, which is 20. I'll probably end up placing it about 80 pips from that actual movement, which is actually below this downtrend line that is right here. So it'll probably end up being right around 110 for my overall stop, which means that's about 80 pips for my overall stop. The take profit in this case would end up being right around 112 if you're just trying to go for a short movement, or which would be 189 pips. Okay, so if you're just trying to go for just a short movement, just to try to scalp the market, try to get some and be in and be out in about 2 to 3 days, I would say that will be your target for being able to get in and get out right now. Okay, so we're talking about right here, we end up being your take profit. So right there will end up being your take profit. If we're talking about stop, the stop will end up being at 110. This is at, make sure we end up saying this right. Take profit will be at 112.61. All right, for its overall position, if we're looking at being able to stop, the stop will end up being at 110. At 110.00. So let's talk about my long-term position on this one. Long-term, I believe that the market has enough room to be able to go up another, at least another 300 pips for its overall movement. Overall, I think that the market is probably going to end up going up to 115 for its overall position, and that's based off of the daily. That's about 275 pips from that from that take profit zone that we just talked about. So hypothetically, if you want to be able to get in this and you want to stay in it for a little bit longer of a time, try to see if you can squeeze as much out of it, kind of like what I'm doing. You can look to be able to buy at this particular point and then go up to 115.38, which will actually end up being 470 pips from the actual target of where we're at right now, which means that your stop, will end up being 80 pips. Your take profit will be 470 pips. You'll have a risk reward of basically 1 to 5 for us being able to get in. So hopefully that makes sense for the actual position. Currently right now, this is a very good time to be able to take a look at this market and be able to possibly be able to get in for this actual movement towards the upside. I will really kind of pay attention to that to see what's going on with that overall movement. That may end up, there's definitely an opportunity as we look at it right now. We want to see it break this trend line towards the upside. Once we get that break from the trend line towards the upside, then as soon as that candlestick closes, go ahead and look to be able to trade it and be able to go from there. But there's a lot of opportunity in that one. Now, typically we don't start with pairs that are outside the United States dollar, but I do like that pair for us being able to get in. So let's go ahead and go to the US pairs, and let's take a look at what we have right now. I'm going to focus in on the pairs that we're actually in right now, and then after that, we're going to go ahead and jump on to some of the other pairs just to be able to see what we have going on. Currently right now, if we look at the Euro US, we end up seeing that the market is basically moving into the sell zone right here. As the market is waving into the sell zone, we can see that there's possible opportunity of being able to sell down to our overall long-term D extension, which is expected to be at 1.0126, actually 1.0136 for that position. Currently right now, from where we're at and where the market is going to end up going, hopefully, it's about 800 pips toward the downside. So what are we looking for right now? If we look at the 2-hour position of being able to get in, because currently, we have a counter trend line break that is really working right now as we look at it. If I zoom in, we can see that the counter trend line break has broken this move toward the downside. All right, so we do have that move right there currently. As long as that stays and holds for this overall position, then we're going to end up having a lot of selling opportunity towards the downside. Okay, so my Come on, come on, come on, come on. Let's see. Okay, so currently as we speak, we can see that the market, and let me clear this up a little bit real quick. I'm going to clear the screen so everybody can be able to see it. Clearly, right now, what we have is this. We have this big rally where the market basically ended up going up and pushing last week. So that goes your outer trend line right there. Let's take a look at the inner trend line. The inner trend line at this particular point with this overall move is right here. Now, we have a break on the inner trend line. The break ended up happening at 1.01 was this overall move. And currently what happens is typically when the market retraces from the inner, then you're going to end up seeing it gravitate toward the outer. Now, two things can happen. One, it can bounce up, and then after that, keep on moving and then keep on rising up, but it's going to rise up off the outer trend line. Or what can be able to happen is that you end up having this move and it ends up going right here, breaking the outer trend line, retesting it. Once it ends up retesting it, then you end up seeing it move back toward the downside and then be able to go from there. Okay, so that's the two things that we're looking for. Currently, right now, we can see that the market is basically in the buy zone. With it being in the buy zone and us trying to sell, that there's really no position for us to be able to sell at this particular point. But we are interested in being able to sell at this particular point. Once we end up getting the opportunity to be able to do so. So right now, remember, what we're trying to find is value and being able to get in and be able to have a strong price to be able to get in at that particular point. So if I would wait, I would look at this. We have a fractal low now. All right, so we want to be able to see two things. There's two different positions that I'm kind of interested in. Okay, and I'm getting ready to show you where they are, and I'm going to explain why. Okay, if I place a horizontal ray right there, we can see that there's a fractal high. Or basically, yeah, there's a fractal high basically at this point. That matches up with the 5-0 for the overall position. All right. With that being matched up for the overall position, then basically what that would end up doing is basically creating a head and shoulders pattern based off of that overall move, which means that we could see some downside movement from there. That's the first one. The second one, which I like a little bit better because it's giving us a little bit better value, is that we can see that there's a position right here, which will end up being above the 618 at 109.90 was this overall position. So if I'm looking at being able to trade it, I would look at trying to trade inside of this sweet spot right here for being able to sell. I would wait for the market to be able to get up to that price. Once the market gets up to that price, then now you have an opportunity to be able to trade down in that overall position. So currently what I'm saying is this: we're going to look at the ray, bring this ray up. We believe that the market is going to end up waving up. Once it waves up, then we're going to end up looking for a sell down to that position. Now, remember how we talked about how the inner trend line will end up moving towards the outer? Well, if it goes up and it breaks down, then it's going to end up breaking the outer at 108.64, which means that now you have that break that you want long term. Excuse me. Now you have the break that you want long term. Now we're just looking at a pair for it to be able to keep on moving down towards our overall extension. All right, so hopefully that makes sense. I'm going to leave this up here just as an example, what we're expecting for the market to be able to do. Remember, I expect for the market to be able to go up from that movement up. Then after that, we're going to look to be able to sell it down towards this overall D extension at 108.64, moving down to 101, 101.34, 36, I'm sorry. So that's where we're at with that pair. I'm going to go ahead and get rid of this because I want to make sure that I have all of my old stuff on the chart. And Lord and behold, I lost all of my other stuff. Great. Okay. Let's see. Let's see. Will I get it back? No. Okay. Oh, well. Okay. So currently, right now, that's what we're looking at. We're looking at being able to sell in this position. So moving forward, let's take a look at the pound United States dollar, see if there's any selling opportunity. If we look at, let's see, Currently, right now, we have that break from the trend line that we wanted. The market is not in the sell zone, but we do have that break that we wanted in the sell based off of this move. It finally hit the long-term outer trend line and it's starting to move towards the downside. I do like that for the overall movement towards the downside. Let's keep that in mind. The second thing that I'm looking for is this. As we are basically waving down in this overall position, remember, we end up taking some positions early. So some people are basically in positions where they finally done broke back even. We do expect that the market is going to end up moving down to the weekly, the extension, which is at 1.1174. There's a long-term movement that the market is expecting to go down to 102.25, but we'll end up trading to that area once we end up getting there. Okay, so as we speak, we can see that the market is actually moving and waving down at this particular point. We have a few trades that we are in currently right now. If we look at where this is compared to where we are expected to be, about 1,200 pips towards the downside. So it's still early days, right? But we do have a trend line break towards the outside, towards the outer trend line, which means that it's a more powerful move that we should expect that on the 2-hour, we should get some trading opportunity towards the downside. Okay, so we go to the 2-hour on the pound dollar, and I'm not gonna erase all this information because I want to make sure I keep this. There's a potential bullish crown that could be happening right now if the market ends up breaking out of this trend line towards the upside. Okay, now let me explain what that actually means. Because the market ended up breaking up and breaking a sequence of a move, right? What happened was that we had this sequence where it had a D extension. From here, it ended up breaking up and breaking out of that D extension. And typically what happens is that the market basically matches up and creates a crown somewhat near the left tip or somewhere below the left tip. Currently, right now, we're in the buy zone. So hypothetically, if this was to break out, then we could see some movement like that towards the upside. Now, obviously, we don't want that to happen. And if we look at what's going on with the daily, we can see that the daily is actually in the sell zone. So this may be a false move. And once again, we hope that it's a false move because we want further downside movement. Now, there's not a chance for us to be able to get into the market right now because the market has not created a fractal high for us to be able to sell down at this particular point. So all we're doing is just watching the market basically wave. We probably might see it go up here just slightly and possibly may break out of it. If it stays below it, then it's going to end up giving us a very weak movement toward the downside. But if it does break, and then after that we get a break towards the downside from here, then we should see that the market will gradually keep on going toward the overall D extension, in which that's what we expect. But we're going to have to make a new fractal low to be able to create that position and go from there. All right, so